Gasoline sat at $4.11 a gallon, still up 11 cents, even as crude crashed nearly 10% overnight. That gap between crashing crude and sticky pump prices is the whole story traders are missing right now. Stick with me. By the end, you'll know the one currency most exposed to this move and how traders are framing the play. Brent went from over $100 Friday to under 91 Monday after a weekend pause in U.S Iran fighting. WTI followed the same path, sliding from roughly $92 down to $84. For FX traders, this isn't an energy story. It's a volatility and risk sentiment story, hitting nearly every major pair. Petro-currencies feel it first. CAD and NOK typically weaken as crude drops and the terms of trade fade. Australia isn't a classic petro-currency, so de-escalation's risk-on lift can offset some of its commodity drag. Importers win instead. Japan, India, and the Eurozone see easier inflation and current account math as oil bills shrink. USD to JPY, UR to USD, and USD to INR could all get modest tailwinds if this ceasefire actually holds. Positioning matters just as much as direction here, and that's where the real opportunity hides. Traders long dollar and long franc as war hedges are getting squeezed as safe haven demand cools fast. Carry traders punished by volatility can start rebuilding UR and AUD carry trades if the pause proves durable. Turkey, India, and the Philippines gain the most structurally, since a 10% oil drop mechanically fixes their trade deficits. The reveal on which currency matters most is still ahead, so don't click away yet. But this whole trade depends on one fragile assumption, that the ceasefire actually holds. A prior ceasefire already collapsed once fighting spread to the Bab el-Mandeb Strait. Any strike near the Strait of Hormuz sends Brent right back toward triple digits within hours. Sticky gasoline prices could also keep CPI hot, keeping the Fed cautious independent of crude's crash. So here's the reveal. USD to CAD is the pair most exposed since Canada's currency depends entirely on crude staying down. Traders are favoring scaled entries over full-size bets, waiting for the ceasefire to survive another week before committing. The caveat stands. Correlations between oil and FX aren't stable, and this whole trade could unwind overnight. Read the full analysis on edge-forex.com. Link is in the description.